Bloomberg Audio Studios. Podcasts, radio, news.
We're going to go to a really interesting panel right now. Raymond J. McGuire, president of Lazard, one of the leading global investment banks, sitting down with us. We're going to listen in.
So Lazard, your partner, Peter, has set some big numbers for you guys. I want to talk about how you're going to get to those, but let's start with private equity overall and where it is today. I mean, it had glory days, and then it really slowed down some, particularly when the interest rates got raised. Now it seems to be coming back. To what extent is the Fed and interest rates actually affecting the rate of private equity deals at all, or is it other factors?
So let's define private equity. I would probably expand that to say asset management, of which private equity is one of the verticals within asset management. Today, we see the asset managers starting with the likes of BlackRock with, $10 trillion or so. You see the other ones who are now getting close to, if not above, $1 trillion. Private equity is a subset of the asset management world. So we see many of the institutional investors as well as the family offices investing in the asset managers. So their assets are growing. And the expectation is that'll continue to grow as investors are looking for returns that either meet or beat the capital markets. Fed policy has slowed a little bit of the deployment of that capital. And until we see valuations come in line, my sense is that you're going to see, at least for the private equity side of it, different to how they're deploying other aspects of the overall portfolio. Private equity has slowed a little bit in the activity. In terms of private equity's contribution to revenues on Wall Street, 30 to 40% and growing. So we expect that to be continue to be a large component of what's taking place in the capital markets and be one of the drivers.
It looks like there's a fair amount of capital out there to be deployed. Let's talk about the demand side, the need for it, particularly some big transformations we're seeing, such that we all talk about artificial intelligence all the time these days. And also you've got energy transition. What are the things that are going to demand investment over the next 5, 10 years?
That's a much larger question. That goes to kind of the macro opportunities that we have, and I would put them in 5 categories. One would be generative AI. In the drop-down box there is the amount of capital that we're going to need to deploy in order to support generative AI. Data centers, as an example. Renewable energy or energy transition would be another of a macro trend. In the drop-down box of renewable energy and energy transition is how do we invest in the infrastructure that's going to allow us to remain competitive in energy transition and also be effective in how we go about energy transition. The other is, this has taken on a different nomenclature dependent upon who's communicating. It's either onshoring, friendshoring, deglobalization, or what I would call reglobalization. And the reglobalization means how do we invest in U.S. manufacturing? Remember, we peaked in U.S. manufacturing in June of 1979, where 1 in 5 Americans worked in a factory in the manufacturing base. Today, that's probably 1 in 20. And much of the dependence that we have in the manufacturing world for all the things that we do are dependent upon supply chain. So reglobalization is going to be another factor. The other factor that I would look to is the largest growing population that exists in North America is 65 years and older. And so how we drop down box, how do we engage in healthcare for that demographic? How do we manage the transfer of wealth or not? And the last is cybersecurity, macro themes. And the investment that we will have to make from the private sector is investment that we also today see being led by what's taking place in Washington. The IRA, as an example, the CHIPS Act, fundamental to how we compete going forward.
Just where I wanted to go, which is the role of private versus public in some of that financing. Because you mentioned the CHIPS Act, which obviously has a lot to do with generative AI. Government's a big player in that. Mm-hmm. And also energy transition, goodness knows with the IRA, government, big player. As we go forward, as you look at it from your point of view at Lazard, what is the right role for the government? What's the right role for the private sector in supplying the capital that's needed?
It's going to have to be a partnership, especially for the elements of the macro trends. In order for us to compete it's going to have to be public-private partnerships, which we're seeing in many ways, I think, with the IRA and with the CHIPS Act. And look at the number of private enterprises that are involved in that with the support of the government. So there's those partnerships. And each one of these macro themes is going to have to be public-private partnerships. As we re-globalize, how do we invest in the elements of that re-globalization? The way that we do that is through, we need government policy that's going to be supportive, and then we need private enterprise to partner. And across the spectrum, you're going to see public-private partnerships that lead our ability to remain competitive.
Ray, how does that play across national boundaries? You talk about re-globalization. There certainly has been a readjustment, I think it's fair to say, when it comes to supply chains. And we even have a competition perhaps going on with the United States and the European Union right now in some of these areas. To what extent does this inhibit cross-border transactions, or does it enhance them?
Well, what you're going to see is the friendshoring to which I referred. If you look at today, 90% of the manufacturing needs of this country are supplied by China. So friendshoring, if I look at auto manufacturing in our relationship with Mexico as an example, if you look at biopharma and our relationship with India as an example, if you look at batteries and our relationship with Poland as an example, we're going to have to cross boundaries. We're going to have to rely on those relationships that have historically been friends of the United States as the global north and the global south at some point come together. We're going to have to make certain that we have relationships with our allies in order for us to remain in the lead. And we are in many fundamental ways in the lead, but where we are exposed from a supply chain standpoint, we need to be able to rely on our partners to reduce that gap.
There's a lot of talk about industrial policy and big investments for the U.S. government, and some money, goodness knows, has been appropriated, a fair amount of money. I'm not sure how much of it we've actually seen, as we would say in the business, up on the screen yet. I mean, talk to me, for example, about the Gateway project, which has been on the table here in the New York area for a good long time, and I'm not sure how much progress I've seen made. Is that a warning to us about the ability to actually get it done rather than plan it and even spend money on it?
So Gateway is a great example. As you all know, probably the largest allocation of capital by the U.S. government, where you're going to see prime examples of public-private partnerships. Why do I say that? Gateway, as you all know, is a $16 billion project with 72,000 jobs. And so what that's going to require is, one, the training of a workforce to fill those 72,000 jobs, from engineers to day laborers. And we also are going to need to make certain that from a manufacturing standpoint, that we have the industries that can supply the equipment necessary for us to go and drill. Gateway is a great example of that. And my expectation is that you're going to have private enterprise that are also partnering with the government. And what the leadership of Gateway now is doing with Chris Kaluri and his leadership, I think they've done an extraordinary job. Bipartisanship, coming together, recognizing that in order for the trade that takes place domestically continue to be facilitated, that the Gateway project is one that is a high priority. If you also look at the implications on healthcare, Gateway in many of the communities that have not benefited so much or have suffered because of the emissions that have taken place across some of the bridges and tunnels, that it alleviates that. So Gateway is a great example of how the U.S. government has come in and supported infrastructure development that's necessary for us to continue to increase our growth in our overall economy.
Let me pick up on one of the things you've mentioned a couple of times, which is workers. The number of workers, but also trained workers, particularly trained workers. In order to grow as an economy, you need more laborers. In the recent past, it appears that we've been sustained to some extent by legal immigration, actually, legal migrants being added to the workforce. What's the role of immigration in terms of the growth of the U.S. economy, particularly as you look at some of those huge projects where you need the workers and also the trained workers?
Well, apart from the political implications of that, first of all, we need to make certain that the workforce that we currently have is a workforce that is trained to be able to address the huge opportunities, the demand for labor. And my sense is that as you think about the IRA and you think about projects like Gateway and you think about the organizations today that train the labor, that there's a tremendous opportunity for us to continue to invest in that. Unions, as an example, how do we invest in that, and how do we make certain that the unions are supportive so they can go train the workforce? Reducing the requirements that you have a college degree in order to do some of the work that's going to be necessary. So workforce training is critical. By the same token, workforce housing is going to be critical. So for 72,000 people commuting into this geography, where do you house them? That's got to be part of the overall thought process and part of the overall architecture as we think about projects like Gateway. And as I think about what Gateway's, the implications of Gateway, profound and exciting and a reflection of what we can do when we decide to invest in this country and invest in the most important part of the country, which is the talent.
When we talk about things like generative AI as well as energy transition, it's hard to have that discussion without talking about China somehow, because China has really put a lot of investment into those. There's obviously national security issues with China. At the same time, how can we get along, if I can put it that way, with China in terms of economies so that we both get the best of it without conceding or compromising our national security?
So I would say when it comes to generative AI that we are ahead in the actual generative AI, the technology of generative AI. If you look at who are the architects of that, they reside in this country. So I take confidence in that when it comes to the energy sources that are necessary for energy transition. As an example, 70 to 90% of the raw materials necessary for renewable energy transition is refined by China. And so as we think about that, we'll have to reduce our exposure to the supply chain and invest more, which is why I come back to what we're doing with the CHIPS Act and the public-private partnerships that reside there, exist there, and other examples out there. So I would say there is a reliance today that we have to reduce our exposure, but that comes to not China, but China plus many, not China plus one. And I spoke about Mexico or India or Poland, or if I look at the global south coming from Tierra del Fuego up and the natural resources that exist there and the relationships that we are developing there to generate or to get our exposure increased to raw materials, the minerals, that's increasing. And I think there's an acknowledgement that we need to increase that. Another example would be the continent of Africa, 54, 55 countries, depending upon how you decide on one country. We have not invested there. That's where many of the raw materials come from. They exist there. The two challenges that we have when we think about the continent, they're two threshold challenges. One is the rule of law, the other is currency. We ought to be able to come up with a structure that allows for us to invest private capital, to invest on the continent in friendly relationships there so that we can access the material. How do we go about doing that? So you have to solve those two threshold challenges in order to attract private investment into those markets.
Ray, what does this all mean for Lazard? As I said, what does it mean for Lazard? Because, as I say, Peter and you have set some pretty aggressive goals in terms of growth. What are the opportunities, all of what you just said, presents to Lazard? And for that matter, what are the challenges as well?
So for the opportunities, I think there are probably more opportunities than there are challenges. As you all know, we've been around now. This is our 176th year. We pride ourselves on being the trusted advisor to the most sophisticated corporate and sovereign leaders. If you think about much of what's taken place in sovereign restructuring, we have been in the lead of that. If you think about what's taking place today in renewables, and you saw announced a transaction between Rivian and Volkswagen. We led that. And there are numerous examples historically and today where we have been out front, both on behalf of senior managements and boards and also on behalf of necessary, important, sophisticated sovereigns. So we have played a leading role, and the expectations going forward will continue to play a leading role. We're onboarding talent to add to the existing galaxy of stellar talent that we have. And it's exciting to be, if I want to be anywhere, and I've chosen, You want to be anywhere, you want to be at Lazard, because we're at the forefront of a lot of what's taking place in the world.
Onboarding talent, is that one of the key gateways for you? How hard is it to find the right talent for what you need to do to grow?
Well, we're looking for A players, so, wherever we can find them, we're looking aggressively to help build on the tradition. I think if you think about storied brands and transactions and sovereigns around the world and who's been involved in that, we've been involved in that, and we are looking for talent. We've onboarded a number of talent today. We've had talent that's covering the sovereign wealth funds, covering the sponsors, covering many of the large consumer products companies, covering the healthcare space. So the largest spaces out there are technology, healthcare, and industrials, and we're onboarding amongst the best talent that exists on the street. That's a high priority as we go forward and achieve Peter's vision of 2030.
Ray, you mentioned you don't want to talk about the politics of immigration. So this is not a political question, but it does get to that. We have an election coming up in November. To what extent does that really take some of the wind out of the sails of companies like Lazard? Because companies are saying, let's just sit on our hands right now so we figure out what happens.
I think companies are trying to decide where they fit geopolitically and geoeconomically. The strategy sessions are now in full force. The elections will have some impact as people digest the results of the election. But I'm not certain that history has demonstrated that's going to have such a material impact. Now, the policies that are going to be necessary to address some of the micro challenges are clear. Micro, I would say, policies to address education, policies to address, notwithstanding the fact that we have some of the lowest historic unemployment rates. In many of our communities, you've got pretty high unemployment rates. Policies to address health care. So those policies will have an impact at a local level, and we need to address those. So the administrations, whichever administration is in situ at that point, will have to address those.
Finally, we tend to focus on the United States and New York here when we're situated here, which is often a mistake. You're a global firm. You're dealing with global clients. What about the level of geopolitical uncertainty that goes well beyond the elections here? And we've got elections coming up, obviously, in France, in the UK. There have been so many elections, a lot of which were surprising, particularly for incumbents. How is that affecting deal making? That is to say, there's just more of a geopolitical risk that you have to take into account than you did before.
We have a geopolitical risk team, and they are in demand, in large part because of what you said. Corporations and sovereigns are trying to digest the implications of the 50-some-odd elections that are taking place around the world. We see the pause that's taking place in France now. We see the scenario planning that's taking place in the U.S. Having said this, as we go through all the geopolitical uncertainty, the country which today is a country to which the world continues to look as the United States of America. So if I look at that and I look at some of the policies that are been implemented and the allocation of capital to the future, I couldn't be more excited about what's in front of us and what's ahead of us.